Hello friends, welcome back to Invest with Ara. On request, the stock being taken today is DWARIKESH Sugar Industries Limited. The Excel spreadsheet in front of you is an Excel program wherein we put financial data of a particular stock and arrive at a signal or a conclusion onto whether to invest in that particular stock at this point of time or not. The fundamental data are taken from an app known as the Stock Edge app. So let's go to DWARIKESH Sugar Industries Limited. We could see here the last traded price of DWARIKESH Sugar Industries Limited was 26.05 on 6th of November 2018. Now let's go to Fundamental tab and understand about the sector, industry and the company. Sector is agriculture. Industry is sugar. Now let's understand about the company. So DWARIKESH Sugar Industries Limited was incorporated in 1993. The product of the company includes sugar, white crystal sugar, ethanol, captive power, molasses and valuable residue bagasse. So this was about the company. Now let's go to the financial indicator. We'll be using this financial value onto our Excel program. The first is market cap, which is 490.53 crores. Earning per share is 2.7. Price to earning ratio is 9.63. Whereas industry PE is not rated, so 0. Book value per share is 21.46. Price to book value is 1.21. Dividend yield is 0. Face value is 1. And number of shares subscribed is 18.83 crores. Now coming on to return ratio, for that click on ratios tab and we could see the return ratio. The return on equity is 31.13. Return on capital employed is 16.7. Return on assets is 10.06. So overall return ratio has given us a signal to buy this stock at this point of time. Now coming on to efficiency ratio, the first is EBITDA margin, which is 10.97, EBIT margin is 8.74, PAT margin is 6.96, earning per share is 5.39, asset turnover ratio is 1.45, days of receivables is 13.53, days of payables is 42.43 and days of inventory is 142.81. So overall efficiency ratio has also given us a signal to buy this stock at this point of time. Now coming on to growth ratio, the first is net sales growth, which is 20.12, EBITDA growth is negative 44.44, net profit growth is negative 35.01 and EPS growth is negative 35.01. So overall growth ratio has also not given us a signal to buy this stock at this point of time. Now coming on to solvency ratio, the most important ratio in shortlisting any of the stock. The first is total debt to equity ratio, which is 0.94. When we click on 0.94, we can see that the total debt on the company is 342.26 crores against a net worth of 365.82 crores. The interest coverage ratio is 5.04. And when we click on 5.04, we could see that the earnings before income tax is 127.47 crores, whereas the interest that the company is paying is 25.31 crores. The current ratio is 1.1. So overall solvency ratio has not given us a signal to buy this stock at this point of time. Now coming on to cash flow ratio, the first is cash flow per share, which is positive 15.84 and free cash flow per share is positive 14.57. So overall the cash flow ratio has given us a signal to buy this stock at this point of time. Now coming on to valuation ratio, the first is price to earning ratio, which is 4.7, price to book ratio is 1.3, price to cash flow ratio is 1.6, EV to EBITDA ratio is 5.1 and market cap to sales ratio is 0.33. So overall valuation ratio has not given us a signal to buy this stock at this point of time. Now the program in its entirety has given us a signal to not to invest in this company at this point of time. Hope you might have liked this video. If you have liked this video, kindly like, share and subscribe. Further, if any one of you wants to perform fundamental analysis of any of your particular stock, can write to me in the comment section below. Thank you.